Good afternoon. This is James Perry at Perry Capital in Miami. It's July 30th. The GDP report came out today. The economy grew at 3% in the second quarter. The mainstream narrative in the market was that was a surprise to the upside. Quite honestly, I think it was a surprise to the downside. I think the economy, as I have talked about for the last 3 quarters, will continue to do well this quarter because of the change in leadership in Washington and the reduction of the budget deficit and trade deficit, not to mention lower taxes, deregulation, and enhanced national security. Those are the 5 key points here. But I think some of the people that are bearish on the economy and market aren't really looking at what's going on in this country, and they should be. And again, this is not a political story. This is an investment story. If investors want to capitalize on what's going on here, they have to look at the facts, not listen to the news. This morning, when the GDP number came out, first guy I saw on TV was Chuck Schumer. Poor guy is almost diabolically bearish and negative about everything that happens in this country. And I just have a philosophical point of view that whatever he says, I'm going to do the exact opposite. And I mean that kind of facetiously. He's just doing his job. The point is that I've been talking about GDP growth getting stronger and stronger in 2025 for at least 3 quarters now. And our portfolio obviously reflects that position. I think Q3 will be stronger. I think Q4 will be stronger. And the reason for that is there's a tremendous amount of money coming into the country. Our exports are going out at the most rapid clip ever recorded. Apparently, exports will add 5% to GDP in the second quarter, and that is the highest number since 1947, which is when they first started keeping track of this stuff. So that's good. Business investment in this country is running at a record pace. Spending cuts, the budget deficit is being reduced at a record pace. The run rate right now for this year is negative $350 billion. The trade deficit is being reduced as well. The run rate on that this year is estimated to be $350 billion. All of that goes straight to GDP. And I think the biggest thing is deregulation. If a foreign country has a manufacturing company that wants to not get hit with tariffs, let's call it Volkswagen in Germany. Volkswagen can build a plant here in Michigan for $500 billion, and that first year, they get to write off that entire investment, depreciate it in the first year. Why wouldn't they do that when the manufacturing costs here are going down due to robotics and the AI revolution? Anyway, the economy will continue to do well. I think that China is getting increasingly isolated. We've seen the EU sign a deal. We've seen Japan get closer to one. That's coming. India as well. Canada and Mexico are coming around, and that's really good. And there is a specter of calmness in the markets and in the geopolitical sphere that is increasing consumer confidence. This morning, Conference Board came out, and confidence was at, I have it written down here, 97% versus 93 last month, and expectations in the future, 75% up to 69. So the point is, as these financial conditions get addressed in Washington in a very common sense way, consumer confidence, small business confidence, and corporate confidence is rising. Expect that to continue in the months ahead. And if you want to know a little bit more about our process and our portfolio, please contact our business development people. We would be happy to get a conference call scheduled with you at your earliest convenience. Thanks so much. I got to go to the airport. Have a great rest of the week and day. I'll be back Friday after the non-farm payroll number. Thanks a lot. Bye.